Are we on the verge of another financial apocalypse? Something 2008-esque. And if we are, will crypto be affected as much as the traditional financial market? Today, we take a look at the collapse of the Silicon Valley Bank and the potential impact, not just on the broader banking system and other regional banks, but what will the impact of such a crash be on cryptocurrencies and the blockchain industry going into the short and medium term? Don't go anywhere. We'll get more into this right in this very video. Let's get it, guys. What's up, everyone? Welcome back to the Crypto Postman channel, where we serve you all the news and the juice as it has to do with the crypto and the entire blockchain industry. You definitely need the stuff that we're serving here. So if you're not yet subscribed to this community, please go ahead and hit that subscribe button. It will mean a lot to me. And remember to ring that notification bell so that you get alerted every time we make a post. And without wasting any further time, let's get right into it. So, Silicon Valley Bank crashes. That's the headline that has been on all the front pages following the demise of the Silicon Valley Bank. This is a bank that was consistently amongst the best banks in the US over the last 5 years. This bank was ranked number 20 in terms of the most valuable and the best banks. What happened to this bank, and how do you go from having close to $200 billion in deposits to not being able to fulfill withdrawal requests? Now, before we get into that, just a bit of a backstory on the entire thing. The Silicon Valley Bank is a California-based bank that was founded in the year 1983. One thing that sets this bank apart from many, if not most other banks in the US, is that it's very focused on tech and tech-related companies. And when you hear that, your mind kind of goes back to the Silvergate Bank and its crash. Yikes, not good optics at all. But if you've not seen that video that we made on the Silvergate Bank, you may want to watch it right now by clicking this link, and then you can come back for this one. On to the main gist. Now, during the pandemic, deposits at SVB skyrocketed from just about $50 billion in deposits in the year 2019 to about $189 billion US, just around $200 billion in 2021. This was around the time where tech startups were not having any problem getting investors. There was a lot of money flying around the tech space, and naturally these tech companies, these tech startups, need a place to put this money. SVB was the place to go for most tech startups and take their money. They did. Now, naturally, banks give loans with the deposits that they have in their custody. So it wasn't anything out of the ordinary when SVB used that customer funds, used those deposits to give out loans. But here's the problem. $189 billion US is a lot of money. And so even after giving out loans, the executives of the bank really thought, what do we do with all of this money to see that we have a steady inflow of cash? What investment do we put the money into? And someone had a brilliant or a not so brilliant idea to invest the money in US bonds. Obviously, this is a great idea because if interest rates keep falling, then the newer bonds that are coming out will have less interest on them, making the older bonds more valuable. So this was not such a ridiculous idea. But the problem is, when interest rates rise, then the older bonds will lose value. And if you sell them, you're going to have to sell at a loss. But if you don't sell them, you can be able to, with the adjustments, get your money back in the future. So fast forward to the year 2022, from 2021, 2022, and the beginning of 2023, interest rates are going through the roof. And not only are these interest rates going through the roof, investor money amongst the tech startups begin to dry up. So they were not seeing as much deposits coming in as they used to see. As a matter of fact, they were seeing more withdrawals than deposits. And if you were a bank, especially a bank that is banking companies and firms that need money to run their their day-to-day activities, pay their staff and all that, you need to have liquidity. And so in order to get this liquidity, they tried to raise money, they failed, and then they turned to selling their securities, to selling their bonds, which would now obviously be at a loss. They had to make the disclosure, they had to make the announcement as per regulations. And so when they announced that they were going to be selling their securities, not just little by little to cover the withdrawal request, but all of their securities, they were going to be exiting their positions in the US Treasuries, something that's supposed to be in the region of the $80 billion that they invested in the securities in the first place. They were going to incur a loss of about 1.8 billion US dollars. When that announcement was made on Wednesday, the 8th of March, guess what happens? Their stock plummets because investors were spooked. They panicked, and so they began to sell their stocks. And in just one day, SVB stocks fell about 60%. Now, before this, remember that the deposits were not coming in and they were already in the negative. As soon as these stocks began to go down, it triggered a full-blown run on the bank, as the VCs that were investors in these tech startups advised their startups to go get their money. We don't want to hear stories. Go get your money from the bank. And by Thursday, March the 9th, there were withdrawal orders at the SVB to a tune of 42 billion US dollars. How do you take that kind of money out of a bank? They don't fold. Now, obviously, at this point, it's a full-blown disaster. The US regulators had to step in on Friday, March 10th, announcing that the bank has been shut down, stopped the trading of the stock, took control of the bank, ensuring that customer deposits were safe and insured by the federal government. Now, how does this affect us and what's the implication on crypto? We know that as soon as that bank began to collapse, tech, crypto, things began to go awfully wrong on all levels. Coming off the back of the collapse of the Silvergate Bank and the shutdown of the SCN, moving to the seizure of the SVB by the US government, we saw the only remaining crypto-friendly bank in the US, Signature Bank, also seized by the US on Sunday, ensuring the safety of customer deposits so that people don't make a run on that bank too. It is widespread, it is massive, but some good news is that the crypto market seemed to recover and recover tremendously well after the US government stepped in, ensuring the deposits and promising to make sure that whoever was responsible for this chaos is made to pay for it, whatever that means. It remains to be seen what the ripple effect of the collapse of a bank such as the SVB, something that's been said to be the second biggest bank collapse in US history and the biggest since 2008. What could the fallout of such a massive catastrophe be on the banking system and on the cryptocurrency industry as well? Do you think that this rally is the beginning of a bull run simply because a bank crashed and banks are crashing? Do you think that the financial crisis right now will mean a boom for alternate currencies like cryptocurrencies, or it will drag the entire thing down with them? I'd like to know what your thoughts are. You can let us know in the comments. We're open to engaging with you. And if you're yet to subscribe to our channel, please be sure to subscribe and hit that notification button so that you can stay up to date with all that's happening. And until I see you in the very next video very shortly, be blessed.